Awesome. Hi, everyone. Hope you guys are doing really, really incredibly well. Now, we just had an Apple event today, just now. Yeah, using our buy the rumor, sell the news strategy. If you've been with me for quite some time, you kind of realize that whenever Apple release an event at around 6 o'clock, you can kind of short all the way through it. Yeah. Apple right now, is it overpriced? Let's have a look. We just have Apple event, new Apple 17 Pro coming out. Nothing special on the 17 Pro other than the battery lasts longer, some cameras a little bit better. That's about it. Nothing much. A lot of analysts really expecting something crazy to happen. They want some AI features to happen. They want some really powerful stuff to happen. But we really haven't got any of that kind of going on. So this is Apple. Most of the stocks in the world has gone all-time high. Apple is the one that still hasn't reached its all-time high yet. Yeah, Apple is a bit lagging behind just because of the growth of Apple is actually less than 10%. If you go to finviz.com, on the training, we kind of, this is a little bit detailed right now, a bit advanced, but just accept it. In the training later on, sometimes the best way to know whether your money is gonna grow, you're gonna make a lot of money, is by looking at the growth rate of the company. So Apple historically has been very fast, but you can see it's been slowing and slowing. EPS this year only 9%, EPS next year 7%, EPS next 5 years 8%, EPS past 5 years is 15%. So the growth has been slowing and slowing and slowing. Why the growth is slowing? Maybe people who wants to buy iPhone already bought it, or just there's no rush of people to spend money on buying an iPhone. Yeah. So that's kind of what happens. So to deal with stocks like that, you got to make sure you buy stocks when the PE ratio is the lowest that you ever seen. Historically, Apple will trade at a P of around 18 to 20. Write that down. 18 to 20. Let's look at what is the P ratio of Apple. Apple forward P ratio. Just to understand whether it's expensive or not. So Apple right now is at a P of 35. The forward is around 30. It's okay. It's not the cheapest. If you buy things that's a little bit overvalued, it's a little bit difficult for you to make a lot of money. Yeah. So 29 PE usually is 25, 21. Oops. 30s, 26, 16, 16, and stuff like that. Yeah. Warren Buffett bought a lot of Apple stocks at the PE of lower than 20, and he sold a lot of them when the PE is very high, the highest around 26, 25. So buying at 29 is not the perfect solution. Yeah. So yeah, the P of 2024, the P went to 34. Today the P is 25. 25 is still okayly cheap. It would be nice to be under 20, something like that. Would be really nice. Let's see. Yeah, 19 will be a steal. Yeah, just around 20. Below and 22 is will be great. So remember there are three ways to make money in the stock market. Just to recap back. Yeah, there's really three ways to make money in the stock market. The first way is on the VIP training, on the week one training. We'll talk about some of the best way to buy some really stable stocks at the lowest PE ratio. Okay. At the lowest PE ratio. These are things you don't have to wait for extreme fears. You don't have to wait for anything. Obviously, extreme fears will be nice, but if you look at have a lowest historical PE, some really bigger stock, large cap stock, you know, these are when you buy at the lowest P, historical lowest PE, if you're patient enough, eventually you're gonna make money. We talk about it for quite some time for this. For example, in 2020, I don't know, 2023, 2020, even 2022 as well, Meta used to be at the lowest P or below 12. They have a problem of, they say TikTok is coming to kill Meta. It causes the P to go really low. And then P of Google really, really low as well this year, 2020, 24, end of December. Or if you're good, probably April's as well in 2020, 25. Yeah, that's just Google, Alphabet. And the reason why the BE went to so low is because, let me think. Google, the PE went so low is because I think they're talking about splitting. Someone is forcing them to split between Chrome and things like that. That's the first part. Second, people think ChatGPT is gonna kill Chrome because it might not do so well. Yeah, so that's kind of what happened. Really low PE went down too, so that would be a really good time to get in as well. The latest one that we've got in a few months ago is a United Heath, because of the scandal, United Heath, what is that called? United Heath, United Heath in INC, something like that. So because of the scandals, because of people got shoot, what's the scandal that caused the stock to drop 50% for this guy? Is because of, just give me a second, is because of, drink some water. Let me It's because of our time down the chat box. What's the reason? We asked our students a few months ago when the P ratio of United Heath dropped to really, really low level. What's the reason again? Down the chat box, please. Yeah. So because of let me have a look on the chat box to see who got it. Who say welcome back? I'm back. Welcome, Mel. Really good to hear you, Marian. Really nice to see you, Nujaya, Sean, Mel, Dom, Alvin, Harsh, Paddy, and cool. So yeah, United Heath is because of the first for all, people think that United Heath has been charging people a lot of money for their healthcare. So the CEO got shot. After the CEO got shot, we got a scandal about mm, about some crazy stuff happened, you know, and then more importantly, Trump comes in and actually say, you know what, drug prices is too high. So that's kind of what happened. So what else? What else is a stock that is very stable? You and then suddenly they go to a very low PE. I need to look at my portfolio to see what you've bought. Robin Hoods as well, a little bit just right there. Yeah, Robin Hood is also quite low PE. We've got what else do we have? We got these Broadcoms as well. Alibaba, some China stocks also quite cheap. I thought we talked about it last week, where China stocks historically is quite low. Yeah, all of these stocks. Let me show you right now. So, so what you do, you just go on, let's start one by one. You go on, let's say Meta, historical PE ratio. So let's see when does it go to the lowest that you ever seen in terms of the PE. So in Meta, we have PE went down to around 13. Lots of students grab that big time, make a lot of big money. Yeah. This is also during extreme fear as well. Yeah. So that's okay. And what do we still have? We have Google, Alphabet. Let's type Alphabet, historical forward PE ratio. You can use both. So let's have a look. Okay, let's look at this first. So tell me which month would you buy Alphabet? Just look at it, guys. Pay attention, and I want you to tell me when would you buy Alphabet. Okay, this is Google. So 2016 is 19, 19, 20, 20, 25, 23, 20, 24, 32, 29, 30, 27, 20 on 2022. This is the extreme fear times as well. 15 is also the same. 19, 19, 20, 22, 24, 20, 18, 21. Can you see the 17 here? Google has never really come down to 17 for a really long time. So that was one of the lowest on 17. Okay. So you would have probably bought at the lowest level, which is in March time. But let's look at more. Google historical PE ratio. Do, 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 do. Do, 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 do. Micro trend Google. So what is this? 3 years time. You can see in March time, the P ratio of Google is 17. The blue line is a P, 18 PE, 19 PE, 22, 25, 24, 25, 17 March time. Quite a low PE right there. Yeah. And now when we buy stocks, we don't just want to look at the PE like that. We want to make sure the growth is still there. So you go to Finviz, look, Apple growth is around 978. Remember, SP 500 growth is already 10%. So anything that's less than 10% is actually not a very good buy. Okay, let's get Google for it real quick. Let's see what Google have for us. How do you know how much the growth will be? Read the earning guidance, quarterly earning guidance and stuff like that, so you can see. So, EPS this year 23%. Google is still a very high growth stocks. Alphabet 23%. Meta, sorry, not Meta. Apple is around less than 10%. Yeah, this year is around 23%, which is okay. EPS next year around 10%, next 5 years 14%. So it's still more than, what this is. So a lot of students already bought it just around March time will just be here. Extreme Fears is now April here. From 150 it went to today 239. A lot of these strong stocks you don't even have to sell them during extreme greed time. High growth stocks for my apprentices, for high growth stocks you can sell them for high growth stocks, you can sell them in extreme greed time. But stocks that is very, very stable, big cap, one of the big cap, Alphabet is one of the big cap stocks, you know, and if the growth are still there, and the earning guidance is not decreasing big time, so holding them is quite fine. But right now, is it expensive? PE of Google is 25 now. Historically, Google usually sell at, let's see. Yep, 17. Where is it? What is going on? Yep, so 17 will be good, 18. So around now 25. 25 is a bit more expensive. Anything below 20, that is good. Okay? So, yeah, but for students on a proper level, higher level training rather than Google, which is just 150 to 239, that is like 80 divided by, rather than just 50% return, there's a lot more powerful stocks that's going to give you a much more. This is week one training. The way to buy is buy stable stocks. We've got United Heath. Let's have a look. The next one is United Heath. This is the latest one, kind of. So let's see. The EPS this year is negative 41. Is because of the drought and stuff like that. EPS next year 8. But look, reading earning guidance is going to give you the right answer. And all of that kind of going on. So April time. Extreme Fears is kind of here, and after the Extreme Fears continue to go down because there's more drama going on. United Heath, one of the biggest healthcare company in the US, it continue to comes down like that, and then come down like that, and then just gone sideways. At this moment in time, we kind of, if you remember, we asked students to short it here already, making a lot of money. They're shorting, and then we put a post there to say it's way undervalued because the PE at the moment was around 10 or 11. Yeah, PE went to 10 to 11 now. Then it started to be like that. And then it started to go up really nicely kind of today. So even August time, you know. Yeah, right now the PE is around 15. Let's look at what's the historical PE ratio of this girl's first, UNH. The lowest price that we ever got for this guy. Let's have a look real quick here. So if I go to 3 years, I just want to look at the historical PE. The lowest price that we've got for this guy usually is around 24 PE. It's around 24, 21, 21, 21, 29, 20, 37, 32, 21, 13. June. And June time the PE is 13. Now it's around 15. Okay. So is it too late to buy this? Is a little too late. It would be nice to buy back in the PE of 13. We bought in a PE of 10. Let me show you. UNH. United. What is this? UNH. So Historically, the lowest PE is always gone to around 20, okay? And then suddenly during this time, let's see what time that is. It went to around 13 PE, okay? 13 PE. Yeah, 13. So if I go to 1 year. If you want to know exactly what is the PE right now, you can use the share price right now, divide by the EPS, or go to Trading 212, they should show you the latest figures right now. So type UNH forward PE ratio. Uh, so it's normally in 2016, it's around 14, 17, 820, and then 17, and then again stood around in June time went to 13. Literally the lowest that we ever seen. Okay. So that's kind of what happened. And yeah, just make sure the growths as well is to see if the growth between here and here, how much is the difference between the growth. If the growth is too small, then buy the lower P is very, very normal. Okay. So 17. Cool. So a lot of these stocks that we look at, Robinhood is the same, Broadcom is the same, Alibaba China. Let's look at China stock real quick. So the reason why China stock got hit so much because of communist countries, the country wants to slow down things a little bit, wants to make sure everyone is rich, rather than just a few people is rich. And then recently, China started to go up a little bit higher there, yeah, with started trying to climb back up. I showed you this last week. I want to show you again. How do you choose the cheapest stock in the whole world? Go to maps. Okay, this is what happened. This is for SP 500. This is 1 day performance. Let's change this performance to, let's say, oops, what just happened? This to like 1 week time. Okay, so that's kind of what happened in 1 week time. So these are medical devices, healthcare insurance plan. The biggest one is UNH, just right here. It's up 12%. Um, Google is up recently 12% because they no longer have to sell their Chrome. This consumer defensive is just a defensive stocks. Okay, cool. So if I go to the world, all stocks, what is this? Consumer defensive. Go to the world. Mm, in the past, yep, the greenest one. China stock has been very green just right here. If you go to, let's say, in the past 3 years, actually the past 5 years. Oh, I think we need the P. Oh, what is this? P? What is this? Oh, it's on the website. So it's about world PE ratio of stocks like that. Yeah. So you're just trying to see, we talk about the last weeks as well. You can see United States one of the most overvalued stuff like that as well. India is also quite high. Um, yep, China is actually one of the lowest that you seen just right here. A lot of things are around fair kind of value just right there. Yeah. Cool. So if you look at, oh, do we have to wait for extreme fears? Look at it, April time here. That's April. Let's see, April time, 7th of April. So literally our strategy works so well. So April time is actually where even China stock was at the lowest point and it started to go up really slowly and gradually like that. Yeah. April is when extreme fears happen for those who are new. Cool, awesome. So that's kind of the first step. First way to make a lot of money is by buying some stable stocks. You're gonna make money eventually. These are quite a guaranteed way to make money if this time is really your friend here. Yeah, by buying some really low historical PE ratio. So that's what we cover on the VIP training. Very, very good. Okay, that's the first way. Just accept that for now. Obviously, there's a better way where the second way is buying some really, really high momentum, high growth stocks. Okay, where you're gonna make even more. But anyway, let's come back to what happened to the stock market right now. So as we said, you can look at the stock market right now. No matter what happened to the economy, it's really tanky, really strong, a really good thing to invest in. It's been going up really nicely. World War One, World War Two, whatever that is, internet bubble. This is Corona crisis. This is the internet. This is the financial crisis 2007. This is the 2020 Corona. This is the inflation, and then we have a tariff kind of crisis kind of going on. So right now, Raven, what kind of crisis can happen to cause the stock to tumble a little bit? Maybe it will be an AI bubble if people stop spending money on AI. Potentially is war. Today, whatever Hamas and Israel just have some things happening there as well. So maybe some kind of things like that, or Trump just say something, that cause a kind of drop a little bit nicely, and it usually will happen again and again. Okay. Now going back to our strategy, go to our website, just right here. You will see that we are now at what stage of the economy. Let's have a look real quick. Okay, let's use our technical analysis first because we have some new students. So what we do based on our trainings as well, what we do, we're gonna draw our very beautiful trend line just right here. You want to have a lot of touches and wider time frames, saying that the best you can use a weekly first. Weekly is very reliable, and then you draw another trend line just right there. This is a little bit steeper and this is a little bit not so steep. The steeper one is normally not so strong. Remember the three criteria to draw a trend line? Yeah, in the training we talk about wider time frame, more touches, and as well as less steep. So this is a little bit steep. That means this is really strong. This is one you want to go all in. While this one, there's a potential pullback just right there, potential bounce. Okay, cool. So that's the first step. Second step is to drawing your support line. Anything above and anything we have few support just right there is saying that it's more likely gonna bounce. You can be drawing quite a lot of them. Yeah, that's just a few things going on. And then you look at and then you draw some indicators. At the moment in time, Bollinger Band is quite beautiful. Let's click Bollinger Band there. So we show you how to use before. It's like a rubber band. Whenever it crosses above the band, it tends to pull back a little bit. Okay. Crosses below the band, it tends to pull back a little bit. Okay. So right now we are just almost above the band, so it's a correction is kind of expecting slowly like that. Yeah. Now looking that's the basic. But more importantly, we do need to like our sentiments as well. Out of so many, I also like our season. Let's go back to our historical pattern. Let's see this. Cool. So, according to our historical pattern, let's go to what's that website? According to our historical pattern, let's go to chart and then you can type SP 500. Let's see if anything comes out. Yep, iShare Core, SP 500. Yep, that's very similar. So you can, according to our historical pattern, you can see July, August, September time is the time where things normally just gone sideways like that. Yeah, normally just gone sideways like that historically. So this is literally what happened now. For the past 3 months, S&P 500 hasn't gone nowhere. Starting from July till here, we're actually, the same. So if you bought anything here today, you're probably going to be the very similar, very the same. Okay, so we are expecting a very nice pullback kind of going on, mate. And let's see one exactly that could be. So this is a pull. This is a VIX. The VIX has to be the highest to be able to buy them. Now, if this is at the bottom, when the safe haven is really, when the bonds is outperforming the stock, when safe haven is at the bottom, it's also a good time to buy. So we are not there just yet. Junk bond demand. Cool. Let's go back to our website. Open Insider, NAI Open Report. Let's open all of these things going on. Just go to one by one like that. So we want to cross over. We hasn't got a crossover yet. In fact, there's a very, very big gap going on. Okay, very, very big gap. NAIM report, we are on the top now. We're waiting for a really nice kind of small correction kind of going on. Usually when it's at the top, you can see corrections kind of usually happen just right a little bit where, let's have a look. Whenever we are at the top here, oops, there was small pullback going on at the top. Small, we'll come at the top a little bit here. Small pullback over here. Yeah, top there as well. Okay, these are not usually where the top is. Okay, cool. What is tanking it? What is tanking? What is all the investor doing? How come the past 15 days just not doing anything? Um, this is because of the interest rate news that's about to happen on the 16th to 17th of this month. So no, 16 or 17 usually just right here. Usually we have a different things kind of happen. Whenever before it was going up, normally after it will pull back a little bit like that. Yeah, the interest rate decision, we are trying to cut a quarter of our rate, 0.25. Okay. Um, Cutting rate usually is a good news. You will probably thinking that things is going to go up when it cuts the rate usually, but buy the rumors and sell the news usually. So it kind of price in already. So normally you will have a pullback kind of going on after 16 or 17 of September, just right there. Yeah. That's where the Fed will comes in to talk about the interest rate. Or how do you know? You go to investing.com and then you go on this economic calendar. Let's have a look on the calendar real quick. Um, I always cannot find the calendar because they keep changing. Okay, it's just here, economic calendar. And then you can look at this month. This is a calendar. You can just choose the whole month like that. And then there are so many, you can just choose the important bit, clear all the countries, and just put the US just for easier sake. And then you have these two going on here, and you click apply. So you can see the interest rate projection, interest rate now 17, 16s as well. Yeah, they're just talking about the interest rate, Fed interest rate decision at around 7 o'clock UK time. So we are predicting to be 4.5. 4.5. Actually, it's 4.5. Forecast is 4.5. This is last time. So it should cut to 0.25%. It should be 4.25 kind of later on. Yeah. Last year, the decision. So this is actually the second time where government comes in to hold the rates for the long time and they cut it. Look, this is to do interest rate. So for those who are interested, if you have a mortgage, you like to borrow money. Look, for the longest time, just let me show you all the interest rate for a second so you can see really from the beginning. Let's see how far it's going to give us. I like this. They're giving us very far. Very far. That's crazy. All right, let's try. If you live for so long, you should know exactly what happened in each of these situations. If you're a good trader investor, you should know, oh, I want it to go to 1970 because that's where the inflation really, really high. So basically, the inflation is very high in 197 to 70. So interest rate was, so they raised the interest rate. Remember, when inflation is very high, you want to raise the interest rate so that people stop borrowing money and stop spending money. Okay. For in 1982, whoever knows what happened, and so 10%, 10%, and then suddenly they start dropping the rate. Okay, this is all fine and good. This is where, when they dropped the rate, is where the markets actually went up at that moment. And then they will raise the rate again to 10, 11, and then it started to drop the rate here, 8, 4, 8, 5. These are all the bull market. Dropping from 10, they drop all the way. Every day they drop. Every year actually. They drop on 8, 7, and then suddenly they started to raise a little bit, 1988, and then they raised from 8%, 6%, 1990. So they started to drop a little bit, drop, 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 drop. This is another bull market. When they drop like that, 1994, 1995, and then they started to raise the rate in four. This is where the stock market was almost at all-time high. They keep, so even though the rate was keep raising, four, five, 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 six. This is the internet bubble, 6.5. And then after the internet bubble, when the market is at all-time high, the rate drops. Can you see this rate drops? This rate drops supposed to trigger the market to be really good, but this is where the bubble happens. Yeah, that's the internet bubble happens. If I can have the graph to show you the chart, I will. I'll show you the chart. Because usually, the government only reduce their interest rate when something in the thing is not working. So this is here. 2000 going down, 2011, 2001 going down, 2002 going down, 2000, for 3 years, after internet bubble for 3 years. So if I go back, where is it? If I go back here, so yeah, the cut interest used to be 6.5, very similar to where we are right now. Everything is at the peak just right here. Can you see? Oh, April, May, June, July. This is all at the peak. Okay, September time is where they cut interest rate like that. For 3 months, 4 months, it's just at all-time high. This is before the internet bubble, like that. It's very similar to what we are seeing right now. It's like going higher and higher. This is crazy. Just look at this. Getting so many people FOMO to get into the market. People are throwing stones at Warren Buffett at the moment, sending death threats. Why are you not going in? What are we waiting for? Are we waiting for the moon to appear? Things like that. And he was very patient. He was really, really patient. And then suddenly things crash like that. This is where the first time the Fed decreased their interest rate. So you can see four used to be four. This is 1995, 5, 6, 6, 6, 6, 6, 6, 6, 6, 6. Yeah, in 2000 it used to be 6.5. They raised the interest rate because the stock going up so high, and finally, something broken in the market. So the things that's broken right now is because people are actually getting unemployed at the moment. If you look at our unemployment rate, I will show you later on. Unemployment rate is quite high right now. So the Fed has to cut the rate. Why the Fed cuts the interest rate? Just to stimulate people to borrow money. It's good to borrow money because it stimulates the economy. When the more you spend money, the more you're going to prevent a recession. If you keep your money and you never spend it, you're going to cause a recession. Yeah, if you have too much savings and you never spend your money, you're going to cause a recession. Anyway, so yeah, 6.5, and then started to drop the rate because something's happened in the market. So they dropped very fast. 6, 5, 4, dropped really super fast. And then they dropped the rate big time. They dropped the rate to around one. We never really have a Previously, we never really have interest rate that is one. So it costs a lot of people to borrow a lot of money. This is 2004. Okay, they stimulate the economy. Markets go up already, but it helps you to borrow a little bit too much money, and then the interest rate raise a little bit, raise a little bit again. They raise the interest rate, which is what we see. And then 2007, from 5, they started to drop again. Do you remember what happened in 2007? They cut the rate, always something happened. So from five interest rate, they cut it to four, they cut it to four, they keep cutting. This is the first time they cut the interest rate again, 2006. This is actually when the financial crisis happened. Remember, the Fed always do something when something bad happened, so they cut the rate. So from 5% of the rate, they cut it to four. Financial crisis happened for market going down big time, 30%, 40%, people jumping on the street, people losing their home, all of that kind of going on. They think that house is stable, but house price started to drop. It's like bubbles starting to form. People go to the house and trying to understand why is people buying a house for such an expensive price. But while people have income is not so much, you watch the movie. It's from 1% to drop to 0.25%. So the interest rate was so low for how long? Let me have a look. Wow, that's crazy. This financial crisis in 2008, they dropped the lowest interest rate to 0.25 for like 5 years almost, 2008 to 2012. So the 5 years, the government just trying to pump the money. You know what, guys? We just have a financial crisis. Let's take the money and use and spend the money, borrow money as much as you can right now. So all the market was going up. A deal is the market was going up big time right now. And what happened? Let me think. Market was going up big time. So, yeah, let me show you. I'm trying to show you the market. So yeah, so you can see this is when the interest rate started to happen to go up, and then suddenly they cut the interest rate. Remember 2006, 2007? They started to cut the interest rate. There's a delay, cut the interest rate, and a few months later, market dropped like that, giving a huge extreme fears, huge discount, huge undervalue for the market. So those people who are very impatient for the past 5 years, they just kill them all. Like they said, like, oh, what happened? Those who are very patient, they're very, very patient. Warren Buffett, some really, really rich people, not really rich people, some broke people suddenly become rich on here. They went in here. They choose some really, really powerful stock using our momentum high growth strategy for their apprentices. So they went up big time. So interest rate 2008, 9, 9, 11, 12, 13, 13, 14. This is where the interest rate is all like 0.25. Market goes up big time because borrowing was very cheap. People are trying to borrow money to invest in stocks, to buy things. Yeah. Anyway, so 0.25, 0.25, 0.25 interest rate super low. 2013 interest rate still so low, still so low. And then 2016, for the very first time, they increased the interest rate by 0.25. They hiked the interest rate. Okay, for 5, 6, 7 years, because of financial crisis, interest rate has been 0.25. Mortgage rate is so freaking cheap. London stock, London UK price, London what? London property price. Everyone, not just London, everywhere in the world, property price went up after the financial crisis a little bit. Yeah, not as much as during the financial crisis, but anyone who borrow money, who take a leap of faith to borrow money because the interest rate was so low, they borrow money, but at 0.25 mortgage rate, house price got pumped again. So this is the golden era for stocks, golden okay for properties also went up. And then finally in 2015, when the interest rate hike, where government says, you know what, too many people are borrowing money right now, so let's increase the interest rate a little bit. So 2015 is where the market actually dipped a little bit. Okay, 2015, let's have a look. Where is 2015? Yeah, here, can you see 2015? We've been going up really, really nicely. 2015, just to show you the Raven, why are you wasting my time to talk about the history? Those who don't remember the history will repeat the history. No one in this world is going to sit down to tell you the history like that, because I personally been through it. I study big time. Those who don't, a great traders is just a traders that who go back in time to study history, because you will realize that things just happen like a cycle. Winter finish, next year winter comes again. Summer finish, summer comes again. So this is what happened. Interest rate, they raise interest rate. So there's a tumbling there. A lot of people bought a lot of stocks because there's a great discount going on. And yeah, Warren Buffett was buying Apple at this moment in time. And a lot of Apple, he bought almost all in on Apple. So his biggest stock, he used to be have Coca-Cola, McDonald's, all of that. but he go all Amex, all of that. He went all in Apple at the moment. Apple stocks growth was around 30, 40, 50% growth at that moment. Very high growth stocks. Very low PE ratio. The PE ratio of Apple at the moment is around 12, 13, 15. Yeah, we also add some positions on, buy some stocks on. There's a time where crypto started to form. I also bought some crypto. You, if you look at any TV, you saw me. I'm very very young. My teeth have some gap kind of going on TV, on YouTube and stuff like that. You see that, you know, I'm one of the first person who talk about crypto, who bought a crypto just right there on magazine and newspaper and stuff like that. So because they realized that financial crisis is a bit weird, you know, people printing money like that, so crypto happened. But anyway, so that's kind of what happened in 2015. So let's go back. So this is 2005, and then they raised the interest rate was keep rising. This is where the property price Brexit kind of happened. Properties price, you know, kind of like doesn't grow as much anymore, but still growing like that. And then 2019, and then they 2.5 interest rate, they drop a little bit just right there. I think this is where Trump comes in. Trump likes to cut interest rate. If you realize, Trump really likes to cut interest rate. Yeah, he just want people to spend money to borrow money. So he cut the interest rate a little bit, and then the market continues to go up big time, go up big time. And then in 2000, go up to one. So this is March 1.25. You can see there's a big drop in a from March 3rd to March 15th, big drop of the interest rate. This is the Corona time, economy shut down, government shut down, everything shut down, economy shut down, travel shut down. And government will be like, oh, people are not spending money. Let's drop the interest rate to make sure people borrow money to spend money. Remember, if you're not spending money, if you're too much savings, you're causing the recession if you don't spend your money. So people are spending money, and then the interest rate was very low. So a lot of people bought a lot of properties, a lot of people buy a lot of stocks here. Crypto all boom like never before. We have students who show testimony after testimony, screaming after screaming, bought house, cash and stuff like that. A lot of successful students, you know, just like that, because you know stock went up big time during this journey. And then you'll be like, you know what, government was printing money, was giving handouts, giving all this free money to people on the street, all this furlough and all of that. And finally we have an inflation. So government raised the interest rate 0.5, market dropped. If you remember 2020, 22, where are we? Yeah, 2022 is here. 2022, raised the interest rate, market dropped, and then it went to 0.5, and then went to 1, and then went to 1.75. Keep raising the interest rate. Why? Because inflation is too high. So rate from 1, interest rate went from 2, rate to 3, rate to 4, rate to 4.5. You'll be like, oh, why is my mortgage rate so high? So those people who have fixed mortgage, they say, oh, I'm very lucky. Oh, you are very lucky if you have fixed mortgage. But anyway, so they went up to 5.5 interest rate. Some of the mortgage has went to 7. No one was buying house at this moment in time. No one was borrowing a lot of money at this moment in time. This is July 2020, Okay, so they hold it for a very long time, and then finally they cut it. They cut it last year, exactly the same time that we have right now, September 18. That's the first time the Fed has hold the interest rate for a very long time, and then they cut it like that. Okay, I wish this is the first time. This is actually the second time. There's another one time is on 1988. Let's have a look. They hold the interest rate, and then they cut like that. 1984. Let's have a look. When do they hold it? 1988. Let's see. Okay, just two times hold interest rate, then cut. One 2024 and 198 something. Uh, we need to use ChatGPT on this. Let's have a look. I just want to show you. You can see on the graph as well on the chart. Uh, 98 what? Let's see. It's thinking very long, but let's find it ourselves. So let's see. It's basically they hold it and then they keep it. 1994 maybe. Mm, can't really see. Let's see what it's gonna say. What is it thinking? Okay, let's type in. They were two times when Fed Fed hold the interest rate for some time, then suddenly they cut. Which year is it? I know one was one 2024 set, and what about another one? Do. Hmm. Yes, please. I need to look at my phone for this. Actually, um it's on my feet. Just give me a second. I'm just gonna go to my feet and have a look real quick. Do. Anyone remember? It's on my feet. Yeah, 1998 actually. It was September 1998. So let's get 1998 September. 1998 September. Is it here? We don't really have a hole though. It's a bit weird. But it's almost there, around four and then five and then six and then five and then 525, 525, 5255. Why does my wall says September? But anyway, September 1998 rate cut. What was it? September 1998. 1998 or what? Let me have a look. I think it's 1998. Yeah, 1998. So 1998 is gonna be 1998. Yep, also a fat hole and then they cut. So held at 5.5 for 18 months. Why does it not say 5.5 here? 5.5. It's a bit weird here, isn't it? They hold for 18 months and then suddenly they cut. Okay, interesting. Anyway, so what's the point? Let's come back. So, and where are we? So yeah, so we got this 5.5. So last time September 18 we have this 5 kind of going on. And then we have 4.75 and then we have 4.5, 4.5 kind of like that. So September 17 we might have a cut again to 0.25. So it's very similar to what happened on September 18 as well. Yeah, just to let you know the history of our interest rate, to let you know that many years ago our interest rate used to be 6, 7, 8, 9, 10, 11 anyway. Only in the past 10 years the mortgage rate right now is one of the highest that we ever seen, but we are cutting it now nicely. The government, the Trump wants to cut all the way to 2%. Okay, he wants to cut all the way to 2%. A lot of people are very skeptical of that. We are predicting that they're gonna be six rate cut from now to 2025 end of. Okay, sorry, 2026 December, six rate cut. So they want to cut it to 2% interest rate. Mortgage rate is going to drop back to usual. That's what they want to do. Anyway, coming back, so normally they cut interest rate because something might happen in the stock market. Yeah, so it's just a matter of time. Anyway, so coming back, what's the situation and what's the point? The point here is that, as you said, seasonality wise, the September normally we have a buy rumors and sell the news a little bit just right there. So yep, wait for the extreme fears. That's kind of what happened. But anyway, so let's go back to your. Okay, this is September time. Bearish. When the bearish is super high, there's a time to kind of buy the market. Yeah. The last time we have this 56. That was quite high. Now it's only 43. That's okay. And then we have the market overvalue is still a little bit overvalue and all of that. So, yeah, so kind of September, end of September, October time, kind of right there a little bit. Cool. So now let's go to your homework right now. For your homework, we will still be looking for like shorting stocks. Okay, so if you've done your homework, just type in the chat box so we can look through your homework. Yeah. So we might, so what I'm trying to say here right now is that, normally we have buy the rumor, sell the news. If you go back to what happened to our stock last time, you see that interest rate, no matter what, it depends on what happened there, it used to do that opposite reaction going on. Okay. That's the interest rate decision on the 17. Cool. Um, let's see. Okay, let's look at homework now. If you've done your homework, type host and panelist so I can see your work. Otherwise, you might have to keep yourself in peace. Now, sometimes the best way to do your homework is just to send me your link so I can see what you are actually doing. Yeah, send me your link. Otherwise, it wouldn't load sometimes. Sometimes it's like this. It's crazy, isn't it? I can't see the graph. I can see the lot of stuff. Just send me your link and remember to share your link to everyone else so I can open it without asking for your permission. How do you share the link? You can do like this. Let's see. Oh, mm, what is his name? A, B, C, D, E, F, G, H, I. I always have to go through this like this. Yep. Like that. You can see the link here. Yeah, just copy that link and give it to me. That's all I need. So if you've done your homework, say me so I can look at your homework. Otherwise, you might have to be like, keep your peace because I only look at the latest one. Okay, let's see who else. Hmm. This is really good, but I don't think so it's loading. Just put a link here so I can see it. Just put your own link here so I can just click it and load your link. Yeah, they're not loading. So guys, just put your link there and load your link in. Not entirely sure why. I think it's too full. You delete all of these people. Anyway, let's have a look now. 9th of September. It's gonna be all the way to the bottom. Two, two, two. So, what days is 9/5? 9/5. That's not very cool. So that's what I want. I want to look at the graph. That's the most important part. So September 4, June 5. September 4 is the latest one. I only want 7 days from here. So let's see, 14 to 12. So they cut the EPS revenue 11 to 10 also cut. So let's see if they cut like that before. Normally we would just short it like that, but let's see if they cut before. 14, 14. What about this? 13. Let me see. 13, 14, 14, 14, and then now 12. So it's a cut. Yeah, so we have to short this guy. 11, 10. Revenue will be nice to drop even more, but Lululemon looks like a short. Let's look at the guy. Let's look at the things that they say here. Expect full year, all of that. Okay, it's a short. Students will have already showed it on the 5th of September and they make a lot of money. Yep, been going down ever since. If you short it on the 5th of September, you'll be screaming. Pretend you miss this drop. You can get in this drop. It's fine. That is for Lululemon. 9th of September. Lulu Lemon. Short because the guidance dropped quite big for the very first time. Literally, if you look here, it's usually just around 12, 14, 14, 13. It's a very small drop. 14, 14, 14, 12. Dude, that's a very big drop. You remember the easiest way to make money is when you see a big drop that never seen before. Okay, we talk about three ways to make money, isn't it? The second way is the second way is when the guidance drops so big, drop or increase so big that you have never seen before in history of that stock. Yeah, Lulu is one of them. Well done. A lot of people are screaming from okay, profits. Next one, Planet Lab. Okay, let's see. We've got 265 to 281. So it's a buy. 61, 61, 260, 265, 281. This is interesting. You want to see. Planet Lab is one of these things we can probably put on the watch list to buy during extreme fear time. Yeah, because it actually jumped more than 30%. Did it? Let's have a look. Put on a finviz.com. Okay, like how do you calculate more than 30%? Very simple. So you literally just go through here. 281 was now September. You go back last year, July, July probably 61. So it's an increase of like almost 61 to 281, four times the money. But let's see on Finviz to see how big it is. Planet, oops, planet, planet, oops, you spell planet lab. Mm-mm-mm. So we want to be more than 30%. So this year was 39. That's good. That's part of our thing. Next 5 years, 42, more than 30%. The only thing that might be tricky here, oh, the revenue. Let's have a look. EPS, sales, EPS, sales. Okay, let's go to the guidance. The guidance is going to be much nicer. Okay, I think the revenue here kind of included that. So let me just show you what to focus on. Focus on the latest one, which is September and July 31st. Okay, so that's the only two things we are focusing on. This and that. Because you want to see compare year over year. Remember one of the criteria we have to buy, one of the stock that we want to buy later on, we want to make sure the difference is huge. Yeah. So now 61 to 281, the difference revenue is okay. This is Q3, guys. Sorry. We have to be consistent. If it is Q3, it has to be together with the Q3. Okay. So in Q3 is only 10%, 10% divided by 60. It's around 10, 15, 20% of their revenue growth. I was thinking about full year. This is why it has to be consistent for the numbers. If I have the full year here, I want the full year number to be here south. Yeah. I mistaken it. I was thinking this is full year to full year, but this is Q3. Okay. So we have to use the top numbers. So please be consistent in terms of the numbers that we are given. But still good. Um, If you were, let's say, if you were here, someone tell me, if you were here, would you buy this stock during extreme fear time? Let's say you're January 31st, you got the earnings report here. Apprentices should be able to tell me. So January is here, and then you will be like, oh, last time was just here, December time. Q1, where is Q1? Let's see. So I'm gonna take January and January. So 58 to 61. That's okay. We need more numbers. The revenue increase doesn't look a lot to me. Okay, that's fine. That is kind of fine. Okay, what about here? Let's have a look. If you bought here, would you have made money? June 4, July Q2. Where's Q2? The day is a bit weird, but let's try Q2, Q2. So 59 to 65. How many percent was that? Let's have a look. 65 minus 59 is 6. 6 divided by 59 is around 10%. 10% times 4. I still need a full year. Full year. To be able to compare properly, the best way is to have the full year. Full year is always more important because they don't have the numbers here. I can't actually I can't actually compare properly like that. Yeah, I will need the full year number there. Hmm. Okay, let me do it manually. I just want to do it manually. This is April 30th, Q2, 2025. Okay, let's go back on this date. So I type Planet Lab Investor. Just trying to go back there, trying to see what happened. Quarterly result. This will show people. I want 2020, 25, Q2, 2025, Q2. I want the guidance for the full year. Hmm. So how to read the guidance? This is the first page is always talk about what happened to the economy, what happened to the stocks. This is already happened. Outlook was here. So outlook wise, they only give us the third quarter. They didn't actually give us a full year guidance. Okay, interesting. So what happened? Okay, what happened if the stock didn't give us a full year guidance? Okay, this strategies is only for apprentices. Yeah, if the companies actually don't give you the full year guidance, you might be like, how can I know whether it increased 30% or not? Remember we talked about one of the strategies to increase 30%. Now you can also, rather than using Outlook because they don't have anything else for you. Obviously, if they have third quarter, you can use these revenues as well. You can use this, it will be helpful. But if you really, really want, or if you really, really need to, you can also use what they already publish, which is the the past one. So let's see. If you go to revenue, let's say if you have a revenue, this is assets. This is the revenue, 3 months ended revenue, 6 months ended 1 to 1. Okay, so it's around 1 to 1 here, the revenue here, and then last time was 106. And what you can do, you can go back. We grew to 2025 here. You can do this as well because we're trying to see year over year is it more than 30%. Because when you screen on Finviz, this is what actually comes out. Let's see if they have the table here. Okay. So the revenue here, we don't normally look at this, but just for the sake of you looking at it. So 6 months in July, 139, 1 to 1. Okay, that's not Let me see. 6 months ended July. 139 and then 121. What is this 61? 61 is what we got here. Why they are not giving 121 is here. 121 is here. So you calculate, is this more than 30% in order for us to do anything? I don't think so. This is more than 30%. So this is just not part of things. What about the EPS? The EPS should be more than 30%, I think. Yep. The EPS growth was quite big, was 0.23 to 0.012. Used to lose like that. So the growth was 50% better. Okay. The growth of these guys 50% better. So it's like revenue is like increased less than 30%, while the EPS was increased more than 30%. So these are okay. These are not a jackpot trade, but it's an okay thing when you really understand what happened to the company and stuff like that. Yeah. But anyway, I was just going through this just to talk about something else. Anyway, so right now will we buy or sell? It's 281. Previously was 265. It increases by 20 million ish. Well, compared to last year, 71 September Q3, last year was 61. So it increased by 10 million each. So it's quite like a big jump. But to see whether or not the jump is huge enough, we have to look at it one by one like that. So let's see, 56, 58, 59, 61, 61, and then what? 61, 65, 71. Okay jump because it's same from 61, 65 to 71. So it's like 5 million each. 260, 2655 million, and then 281. So it's a bit of like increase. It was still okay to buy during extreme fear. You're not gonna lose money. Planet Labs is quite huge when we look at it. The way they increase is actually because if you look at it carefully, 265 to 265 is only 5 million increase. And then 265 to 281 revenue, that's like 20 million more or 16 million more. Let's see if in the past this thing happened before. So I look at it just now, 54, 56, 58, 59, 61. We never really have a time where revenue increased so big. Okay. So so it's actually quite a big increase. People who bought it on 9/8, okay, probably make some money there as well. Planet Lab, let's have a look. Planet Lab, just like that. You can see it's spiked up like that. It's already at all-time high. This is one of these things you do during extreme field time. Okay. Interesting. Yeah. You want to make sure things increase like never seen before. This is interesting. What company is this? Planet Lab. What do they do? To know what they do, the first page they say it. PlanetNet is a leading provider of a daily data or insights about the Earth. Excuse me. NATO, Defense Department. Okay. Tell you about what happened to the Earth. Interesting. Increased demand of unique Earth intelligence. Contract with the German, with NATO, US Department of Defense. Hmm. Satellites and all of that. Interesting. Cool. Next one. Cradle technology. Lots of our students bought this big time, make a lot of money on this. But let's continue. So let's see from the beginning, 42, 51 increased by 9, 59 increased by 7, 58, 65, 115. Can you see it's almost double this guy? Literally from December to here, this guy almost double his revenue. That will be the time you will be like, wow, 100% increase in revenue. Revenue is a very important part. For those who are new, write it down. And revenue is probably the most important thing. More important than EPS because revenue depends on how many people coming in. Anyway, so that's kind of what happened. And yep, revenue double. You'll be like, okay, when the revenue double like that, the next extreme feels I must buy this, which a lot of our students did. This is December. They are waiting for the extreme fears, which is happening in April time. A lot of students bought that and they made a lot of money screaming, screaming, screaming. If you bought this at the bottom, you make 5 times your money. Yeah, incredible in a short space of time. What about right now? 155, 185, 230. So is it big today? It's not like double double, but we still want to be at least 30%. Let's have a look. 155 to 185, that is 35. And then to 28230, that's 50 million more. That's interesting. So right now we are kind of here. Okay, cool. Yeah, definitely a buy during extreme fears. So it'll be nice when it double. Just remember if you look at your things right now, your homework, listen carefully, is to spot stock like that. They went from 65. Nvidia was like that in 2020, 23. Everyone went all in. Yeah, you can get all in when the revenue was used to be 65 and then they double. Nvidia was like that. Palantir was almost like that. A firm was like that. A lot of things are like that. Taiwan, it was almost like that. Taiwan Semiconductor was almost like that. Um, all of that stuff. Okay, apprentices, I'm very excited for you. Anyway, let's continue. Um, that's what we will be doing when the time comes in our one-to-one brace. I think we done brace as well. Cool. I think that's about it. Not many stocks came down, actually. A lot of them just keep going higher. Let's look at brace. So, not many stock came down means not many earning guidance actually dropping. Look, 0.31, 0.15, 0.41. So this is an increase. This is a buy brace. Let's have a look. So write that down. The way to make money is to make sure when the revenue double big time like you never seen before. What about this C3 AI? Loss of 383. What? Revenue 72. Revenue 100. We need the full year guidance though. Let's read this. Reported revenue guided 72. Okay, let's read from the beginning. 88. And then what? 95, 100, 72. This is the first time where this company actually decreased their guidance like that. Let's read carefully. 72, 74, 78 increase, 84 increase, 88 increase, 95 increase, 100 increase, 100 increase. 72 is the first time they decrease their revenue. So you should be shorting C3 AI on that date, March number 3rd. Interesting. Okay, let's read more about the operation. Negative 49, negative 39, negative 23. C3 AI. What's going on here? What is this? Is this what company is this? C3 AI. Is this guy? Potentially. Going down like that. C3. Oops. Oops. What's happened? C3 AI stock. Yep, but the past 5 days it's just been going down like that, 7% like that. Interesting. Cool, cool, cool. Well done. Let's do the next one. Jeet Lab. Mm, what is this? 0.68, 0.74. This is a buy because it went up. 74 to 82. It's not a big up, but it did went up. Tilly, 0 what? 0.32, 0.09, 0.23. Let's read carefully. 160 as a net sales, 14, 149, 105, 150, 134. The sales decreases actually 150 to 134, but the net loss actually become better. Let's read this. Expect a net loss of this on a net sales of 134. One is good, one is bad. Let's be tricky on this. Tilly, let's look. Yeah, it's just gone sideways like that. Humble. Okay, let's see. Three, 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 two. Drop for the first time. Stock drop big time. Remember, whenever the first time something happens, it's always a big chance to make a lot of money. Stock drop. 2.95 is the same. 2.24 is even lower than that. Wow, what is this? Humble. This is a 2.9 to 2.4. Kind of need more information. But let's have a look. Campbell. Is it Campbell soup? There's a lot of Campbell. Not sure which one. Campbell. Stop. Yeah, can't find on IG. This is fine. Sprinkle from 0.1 to 0.09. Small drop. Neo. I think we done Neo. 26893. So looks up a little bit. Next one. Agilent. 5.54, 5.56, 1.3, 1.57. Both increase a little bit. Cool. Awesome. Let me see who else has done the homework. Make sure you have the link so I can open your link without loading. Let me try again. Let's try Yogi again one more time. Is this your link? Oh, nice. I love your link. Really nice. Let's have a look. Beautiful. Beautiful. The date was 8th of 9. Okay, nice. Awesome. Now, revenue dividend maintained. Okay, let's see. First of all, you're doing it correctly because this is what I want. Okay. You put a line here. Now, what I want here is just the guidance. What you've given me is the the numbers. Okay, I want the guidance. I want the outlook. So it doesn't look like this is the guidance. Yeah. Let me tell you where do you get the guidance. You get the guidance on there's no guidance here. Reaffirm full year guidance. Reaffirm means it's the same. So you have to go to the company to get the guidance. So how do you get it? Go to car C. I normally don't show people, but I'm going to show you. Go to car C and then go to press release. And then at the bottom, it looks like you've been taking these numbers like all of these numbers. 5.77, I think that's the number you got. Let me see where you get the number from. Yeah, 5.77. You've been taking the past numbers. You remember, was is the past tense. We don't care about the past tense. We just want we just want the outlook here. So this is the numbers we need. Yeah, but you're doing really, really well. I'm proud of you because this is your first one. You're doing so well. Awesome. Reaffirm means the companies didn't change its guidance, so there's no need to do this because the reaffirm is the same. We only want to do it when the guidance is big difference. Everything looks perfect. It's just that what we want is not the first page, it's just the outlook, the guidance page. You're doing is so beautifully, you cannot imagine. Awesome. Keep it up. Let's go to the next one. Who else have done it? Put the link here, guys. Where's the link? Let's have a look. I don't think so. I can open without the link nowadays. Where's the link? Hmm. Please put the link. I'm going to wait for you. Yeah, like that. Put the link here. So I can just copy and open your link. Just make sure you share it to everyone so I can open it. Otherwise, we might take 5 hours for you to open it. Very beautiful. I love this. Okay, let's do this right now. Tell me when would you buy this stock? So let's start 2020, 22. Good. You've been starting from the beginning. So 6.5 is okay. 6.7 is okay. 7. So 7 to 6 is 1. 1 divided by 6 is 10%. So you probably wouldn't have bought this here. You want to be at least 30%. So continue 7.6, 7.9. It would be nice to have a full year. Oh, they have read the calculation at the bottom. So you can see this is the time. May is a time where you will be like, okay, the revenue is starting to be good. What about the EPS? We want that numbers as well. So this is the time we'll be like, probably start to get in. And when it gets to 21, you'll be like, probably not. So you probably want to like, you know, just so May 26, you wait for extreme fear. Extreme fear will just be in June time or October time right there. But okay, that's good. Let me see one more time. 8.9, 7. And then this is 8.9. This is 6. Okay, let's continue. It would be nice to have the EPS because now year revenue is more than 30% you would have bought here. That's correct. But what about the EPS? Okay. So let's continue. 17 you wouldn't bought, 10 you wouldn't have bought. Year to year negative, you probably wouldn't have bought. 4, not really. 4, 6, 1. This is where you will go all in. 400 increase. Same thing with just now we see 100% increase in what stock is that just now? Cradle in December 2024, 100% increase, 61 to become 161. Nvidia 100% increase. A lot of things are like that. This one is also like that. This is 400% increase from 50, sorry, from 8.9 to 50. Wow, big money, guys. Can you see 8.9 to 50 year over year? In a 1 year time, this company grew their revenue by 400%. Not many people in this world done that, but this guy have done it. Okay, well, a lot of students who got in already during this time, December 7, 2023. You will be like, Raven, December 2023, should I wait for extreme fears to get in? The answer is, remember there are two answers for you. The first answer is that when it's stable, you can buy. When it's low PE ratio, you can buy almost straight away. The second time is that when the guidance increase so big, you can actually click your button straight away. Yeah. But in December time is if the market is still undervalued, if the P ratio of this stock is still low, you can get in. Let's have a look what is the P ratio of this guy. Broadcom PE ratio. Broadcom historical PE ratio. Let's use Guru focus a little bit. Can't really see. So 15, 19, oh, 15, 19, 12, 19, 34. So at that moment, it's around 19. That's still quite okay. Yeah. Usually, AI, usually, what not AI? Usually, technology companies is set at above 30. So below 20 is good. Okay. Just write that down a little bit. Technology companies usually sell above 20, above 30. So anything below 20 is actually okay. So let's look at the P of this guy. Right now it's selling at 65. So let's get 5 years. So you can see it went from really from 50, usually P, 2022, 2023 is the lowest P in history. And the lowest P that we have is around 18. You saw that, yeah? 18, 19, 20, 16. That's a steal already. 18. So the moment where the guidance happened, let's see. When the guidance times 4, December 7, 2023, the PE at that moment for this guy, 2017, 2023, yep, was just around almost at the bottom, just right here, the bottom zone, just right there. 2023, almost at 23 kind of ish. Okay, so it was around there. Cool. Remember when things times 4, in terms of the growth rate, you have to take growth rate into consideration because before that, there's no growth. Remember, the PE ratio doesn't take into growth rate into consideration. It's just about price divided by the earning. It doesn't really take into how much growth there is for this stock. So in order to take growth into your consideration, we have a formula, okay? We have a formula. I hope some of you remember the formula. I think it's around the line of 2.5 times 8, 8 times, I think it's the X. Okay, let's do it again. I need to take my book, let me take my book out. The formula, just give me a second, let's take that out. Um, when you want to calculate the true value of the PE ratio of the stock, you have to calculate the true value of the PE ratio of the stock is this. Um, okay, right on the whiteboard, but is this. It's basically 8.5. You have to memorize it. It's on a higher level training, yeah? 2 times the growth rate of the stock for the whole year. Okay? So for example, if 8.5 plus 2, because the growth rate is 400, so that's huge. That's 400. So this company is supposed to sell at a PE of around 800 PE, supposedly. Apple growth rate was around 8. So you times 2 and then you plus 8.5. So Apple should be selling at 8 times 2, 16. 16 times plus 8, 27. So Apple is selling around 27 PE right now. It's selling at an okay price. But if you can get below 20, that would be nice. Where's Apple? Let me show you. Yeah, Apple is selling now 25, 29 PE, 27 PE, a bit overvalued, but this is the price that Apple should be selling at 27. Nvidia, for example, let's look at Nvidia growth rate. Nvidia growth rate was around, let's see, the next 5 years is around 34. Okay, 34. Mm. So 34, so you use 30, same thing, you use 30 times 2 and then plus 8.5. So Nvidia growth rate is around 668, around there. Okay, which is what we is almost at the most around 48, 68. It's a little bit undervalued, but yeah, It's okay. It's a bit undervalued at the moment, but historical low. So if you look at Nvidia, it's probably selling at a historical low value. Let's have a look. Nvidia historical PE ratio. Let's look at. So the P ratio of Nvidia right now is 6170 48. Okay, just right there. So let's see the numbers 75, 63, 115, 51, 40. Yeah, it's a historical low. 54, 54, 40 January, April 35. Yep. According to our calculation, it's almost correct. If you can, mm, 35 would be really nice as well. Yeah, because this growth stock is what is the growth rate of this company? Let's see. The growth rate of this company in the past 5 years, what about the next 5 years? You kind of have to calculate what is the growth rate of this company for the next 5 years. Yahoo Finance kind of give it to you. Yahoo Finance, Nvidia. Let's see what's the number they give it to you in terms of the growth rate. We always want the growth rate of the future. How much do you think Nvidia is gonna grow for the future? So the growth sales for the next year is around 32. What about the next 5 years? So, mm, so Nvidia is around 41, SP 500 is around 13, current year 49.9. Yep. 41 next year, but the next 5 years is gonna be like lower and lower and lower. So let's give and take probably, yep, 41 you can use 41s as well and 30. So is Nvidia undervalued right now? Most of the website they will kind of tell you that Nvidia is kind of a little bit okayly, let's have a look, undervalued. But we will still buy them when the time comes. Yeah, we don't just do it. It's not because when something undervalued, we buy them straight away. Let's get NVIDIA real quick. Let's type NVIDIA here. And this session is a bit advanced for a lot of people, but let's just accept it for now. So here is 35 will be the lowest NVIDIA has ever got right now is around 48 we saw just now. 5 years. Okay. Wow. This year in January time is the lowest it's ever got. Yeah. As we talk about for the strong stocks, if you see that the PE ratio go to the lowest, you want to go all in. We also have students who actually went all in as well in April time for our beautiful Nvidia. Let's have a look. Can you see the PE ratio was the lowest here? For many, many years, Nvidia has never sell at anything below 30, below 40. Can you see? Not really. And then finally, we have one very recently, and that's actually in April. So in order to buy that, you just have to wait for that to come on in again. Yep, come on in again. That's April time. 100% April at the bottom. Cool. Awesome. Let's come back. Mm, why do I suddenly talk about this? Oh yeah, Broadcom. Okay. So, yeah. So because this 400% for a very big company is really nice, so you would have got in here as well. On December 7, I believe our markets are undervalued as well. Let's see. I'm gonna click which one? This one. Open insider just cross, yes. Let me show you to see whether it's undervalued or not. This is one. So we can see for the past 5 years. Yep, you can see in December time when it happened, December 7th, when you realize it's 400. Sometimes you'll be like, oh, it's 400%. Should I buy or should I sell? I'm going through all the process that we've gone through just now. You will realize that even in December time, which is which is around October. That's where we went all in just at the moment. Okay, let's go into our fear and greed. Fear and greed also kind of turn it a little bit. So who is gonna give you a yes answer other than our strategy says that when it's so big you can go buy straight away? Open Insider also just cross over at that moment. Yep. So it's about PE ratio still not the highest in the world, as well as so yeah, when things grow up so much, so the right PE of this guy supposed to be what? 8.5 plus 2 times this number, 460. Make it conservative, 400. So the fair PE for this guy supposed to be 800 PE. Not even joking. That's what the P of these guys are supposed to be. So at the P of at that time, I think this is around 21, is very, very, very undervalued. Yeah, cool. So you were bought here, December 7, lots of students bought it. They're very happy. Let's continue. And then Q to Q10, year to year. We're looking at year to year. So it'd be nice to see the year to year. Now, people will be like, oh, when do I sell it? If I bought it here? Um, when you realize that the growth is not mm, 30% year over year, okay? So how do you know? Let's have a look. Quarter to quarter, 10% times 4 is still 30. 7.2 quarter to quarter down. You need to know the full year, what is the right number. But if I calculate June, look, 51 to 8 is still 10 times the money, still very big. So you'll still be holding it here. 14, 9, still almost 50%. You will still continue to hold them. What about this? So this is why, Dom, if you are doing it, you need to put year to year all the time. Okay? 51 is good, you will hold it. This is what? 14. We need the Q4. Yeah, we need the numbers here. What is this? 14. This is 50 though. 14.6. Maybe this is full year. How come the revenue drop like that? Something's going on here. And then 14 as well, 14.9. So you compare this to this, is it more than 50%? This is 14, this is 55. I need to make sure whether this is Q1 or Q1 or not. And then, yep. So remember when you write something, just give me full year and quarter to quarter together. The most important numbers that I want to see is what is it year to year. Yeah, just give me that. You'll be doing really, really well, Dom. Keep it up. Very good. It's just the numbers got a bit messy a little bit here because you stop the year to year. So we don't really know what happened because you have the year to year all the time. Year to year is here, year to year is here, year to here, and then year to year stop. That's just a bit weird. Awesome though, very good. Question: will we buy when we come next? So year to year is only 24. That's okay. Not the best, but it's okay. Let's read the guy. Let's read the thing. Very good. I love it though. Mm, nice. Doing really well. Yeah. I think you have the numbers here. This is the late one. Year to year change. NA. Oh, you can't even find it. Now, if you can't find it, then you can use the past numbers. I know guidance, sometimes they don't give you the guidance, but as I did just now, you can look at the actual number, okay? If they don't really give nothing to you. So using actual number is actually quite fine. Awesome. Let's look at who else have done the beautiful homework. Well done, Sean and Alvin. You're doing so well. You can also wait for extreme fears before buying Cradle. Yeah, definitely, you will. How come you wouldn't wait for extreme fears before buying Cradle? You will. Actually, even Broadcom, even if you wait till extreme fears, you also make a lot of money because the next extreme fears happen Broadcom just in after you see the 400%, the next extreme fears happen in yeah, just in September time. August, September here. So the price are quite similar. You're not missing out a lot. Even here is fine. Cool. So if you're not doing an extreme phase, you just got to be a bit patient. Things will go to your ways as well. Awesome. I think we've done all of the homework. Well done, everyone. That's it for today. So what's the conclusion? The conclusion here is that we go to very deep today. Yes, a little bit deep. And most people will not be able to get it, and that's absolutely fine. The more you see, the better you're gonna get. For apprentices, I'm very excited for you because the times, we're gonna when the time comes, you're gonna book our one-to-one, we're gonna select some great stocks. I show you how I put my real money in, and we can see how you put in, select some really great stocks to make big time. We have students who four times, five times their ISA account, many, many times. And yeah, and they're very, very happy. So awesome. Patience is really important at the moment. It's more important than anything else. We also talk about the interest rate, letting you know that what happened, how to stimulate the economy. Awesome, doing really well. That's it for today. If anything, let me know. But I will speak to you. We found one stock today. Um, Everything is at all-time high at the moment. Raven, can I buy things when it's at all-time high? Well, if you really, really want to buy at all-time high, like you just have to be ready to, to have the crash down eventually. Yeah, because it's literally at all-time high. If you buy anything, you will see a penny or two penny, but when it drop, you're gonna drop quite a lot. So yeah, you can see last time if you buy an all-time high here, in 2020, whatever that is. Mm, 17, 19. Yep. Here, all-time high, you'll be like, oh, let's we just buy everything. So the market start for 3 months sideways, not going nowhere, and then suddenly there's a come down. So it's very simple. It's very easy for the market to start for 3 months like that. Yeah, before it start going to the right direction. So patience is really important. A lot of people are trying to rush here. A lot of people are trying to buy things here, and then eventually, it's just like that. So you might as well any momentum that you want to buy here, you might as well just save it and let me know. Awesome. The time is just almost there. Mel, if you send it to hosts and panelists, no one can see it. You have to send it to everyone. So you're doing really, really well. Awesome, everyone. You guys are doing so good. And I will speak to you very soon. Al is asking me when is the right time to get in. Text me. I'm gonna send you a video. Awesome. So we have Evelyn, we have RJ, we have Alvin, we have Ann, we have Amin, we have Barry, nice, we have Bieber, we have Bobby, nice, really nice to see. Bobby, I want to send you a video, so text me as well. We have Come, we have Claire, we have David, Divina, we have Evelyn, we have Javier. Javier, well done. Make sure you have your one-to-one session before that, Javier. Really, really excited for you. We have Jay, we have Sean, Leo, really nice as well. Maria, Mario, Matt, nice to hear from you and no Nora Party. Reshma, Ruxana, Stan. Awesome. Really good. See to you guys soon. You're welcome, Paddy. And we're Evelyn, we're